Hello and welcome back to Core Finance in association with the NEX Exchange. I'm joined today by Ivan Minter, who is the CFO of Ace Liberty and Stone. Ivan, thank you very much for joining us here.
A pleasure to be with you.
Well, let's start off. For our viewers and investors or potential investors, can you just talk us through Ace Liberty and Stone, what you do as a company, where you operate, and probably more importantly, how you make money?
Okay, yes, I'm happy to do that, Matt. Ace Liberty and Stone was actually floated on what was then Plus 10 years ago, in fact, November 2007. We didn't do very much for the first 5 years. The climate was very adverse for us. But about 5 years ago, we started seriously making investments in the UK commercial property market. At that particular point, we got backing from a number of shareholder investors who were introduced to us through a Beirut bank called Levant Investment Bank, SAL, Libank for short. And they introduced a number of wealthy, high net worth individuals who invested in us. And that was where it really took off. And our key plan is to try and find properties which have potential for increased value. Obviously, we're looking for good covenants. Probably about 70% of our tenants are national or local government organisations, so we go for security. We are looking for long-term rent, but we're also looking for that plus, which is to find another use for the properties at the end of the lease period. So, we've got those various aspects that we're going for when we look for a property.
And where are the majority of the properties based?
We haven't got anything in London. The prices there really are prohibitive for us. We've got a lot of properties in the north of England. We've been in Sheffield, Leeds, Middlesbrough, Hanley. We've also a few properties in the south, Margate, Barnstaple. Really, geography is not an issue. What we're looking for mainly are properties that fit the profile that we're trying to buy against.
And what is your strategy? Is it a long-term strategy, and is it aligned with the investors?
Yes, I mean, what our investors are looking for are the sort of normal things. They want safety, they want a return on their capital, and they're also looking for long-term growth. And the combination of objectives that we work to gives them that. And so far, we've delivered that to them.
And with regards to adding value to these properties or getting value out of these properties, how do you go about that, and also how do you add value to the shareholders? Well,
there are a variety of different ways of doing this, and perhaps one or two examples might actually be easier than theorising. We have a number of properties that we've bought which have got relatively short tenancies. So we have bought properties with maybe between 2 and 5 years left on the current tenant's tenure. And we will then look to find alternative uses for those properties when the tenant moves out at the end of the lease. One which is perhaps quite a good example were two office blocks we bought in Sheffield. I bought them probably about 5 years ago, Sovereign House and King House in Sheffield. And the situation there was that Sheffield City Council had a number of individual tenancies in both buildings, and the buildings were about half full. And what we did over a period of really only a few months is we renegotiated with Sheffield City Council. They took a complete lease of one building, which gave them a better security from a tenant's point of view. And also the building then became an investment fully let, which we were able to sell off at an increased value. The empty building we then sold for student accommodation. So we don't actually do the development. We don't undertake the development risks that go with the long time period, the speculative nature of that type of work. But what we'll do is we'll get permissions, we'll do the commercial side of it, and then sell it on to a developer who will then move forward and do his part of it.
So it sounds as if your management team are looking at opportunities, and there's different ways of managing these properties and getting the best value out of it. So do you have an experienced board who are able to look at properties and opportunities and decide the best way to deal with it, be it lease it out to a local authority or create student accommodation?
Yes, the board is made up of 3 executive directors, which are Ismail Gandour, who is the CEO, and he has 30 years experience of commercial properties in the UK. Very experienced, and also more importantly has 30 years worth of contacts, so that helps us when we're trying to locate properties or sell them. He's also supported by Mark Thomas, who's a chartered surveyor with his own practice in Sheffield, so we have a very good rounded commercial experience in the executive board, and then I'm the 3rd executive director looking after the admin and finance side. And then the non-executive directors, who are actually a majority of 4, we have a non-executive chairman who is also the chairman of Libank in Beirut, another manager from the same bank, and then a further director who is a representative of one of our largest shareholders, and he's a trained engineer and works in civil engineering in the Middle East. And the 4th non-executive director is actually a retired West End estate agent who also brings useful property knowledge to the board. And the structure for that, again, it has a purpose, because we believe that the non-executive directors are there to control the executive directors, stop us going off in the wrong direction, and generally exercise good governance. And so that's the way we're organised.
So obviously you're a listed company on the NEX Exchange. What benefits does that bring to a company like yours?
Well, it brings some very substantial benefits. As you've gathered, most of our shareholders are based abroad, and so they are relying very heavily on the reputation that the London market has. London is obviously one of the best regulated markets in the world, one of the leading financial centres, and as a member of NEX Exchange, of course, we have to live up to the standards that are required of a listed company, and that means the exchange regulations, obviously Companies Acts, elements of the Combined Code, and one of the things that maybe I can just mention to you is that we produce comprehensive annual report which contains a lot of information for shareholders: strategic report, corporate governance statement, normal directors' reports, KPIs, and also a lot of disclosure in the notes about the company's activities. And we're very pleased to do that, because that gives us a structure. It's not left to us what we want to tell people. We make regular announcements. There's one going out as we speak about the latest property acquisition we've made. And we've gone one step further than that, and we actually produce commission research notes. I brought a couple there just to sort of show you, and those are produced by ACF Equity, who are professional experts, who again provide knowledgeable independent view of how well the company's trading. And this really all stems from the fact that we're a member of a stock exchange, and it's certainly fair to say that as a private company we would not have achieved the growth and the progress that we have over the last 10 years.
So looking at that, and also where you'd like Ace, Liberty and Stone to be in 5 years' time.
Yeah, I mean, I think one of the things that perhaps as an admission is that we've actually done rather better than we expected. So looking ahead is actually a little bit difficult. I mean, we've currently got a portfolio of commercial properties valued at about 54 million. Shareholders' funds obviously relate to that. And we've, as you know, invested probably about 28 million in the last year. So, we're very active. Some of that 28 million came from new funding, some of it came from sales of existing properties as we've turned them over through the ownership cycle. Where we're going is hard to tell. We're going to definitely continue with the same policies. We have properties in our portfolio which have potential. One property in particular, if I could just mention, which is in Leeds, is a building where the lease comes up, I think, next year. Been occupied by the Department of Transport ever since it was built in 1970. We believe they'll probably renew the lease. They're talking to us about that now. But at the back of our minds is the fact that this particular site is quite a large site. It's got a very big car park and it's situated close to a couple of universities. So if the tenant moves out, you know, it's ripe for development because we could build on the car park and it would be ideal for student accommodation. So we have properties like that in our portfolio with, you know, potential for future growth. If the tenant renews, which looks likely, then of course we've then got a 10-year agreement, a 10-year lease on a property, which again improves its value, as opposed to one with 2 years left on it. So we have things like that in the portfolio. We also are planning to build on the base that we've created. We see it very much as a base. It's not the end result. We still have support from our shareholders who are prepared to put in more funds. We mentioned the CLN that was issued a few months ago. That is an important part of our strategy. And we're looking to develop on that to bring in more funds. We have some properties we would like to move on through the cycle, take the profit on that and reinvest into further properties. Where it will end up, it's very hard to tell. We're certainly finding our profitability is improving. Our overheads are fixed pretty much. So whereas now we've got a rental income from the portfolio 4.2 million, the overheads are pretty much the same as they were when the rental income was 2 million, which is only a couple of years ago. You know, we've gone a long way. And as we keep adding properties, you know, we have something in view at the moment which will add into that again from funds which are presently uninvested. We think this is just going to keep going. How far it's going to get? Very hard to tell, but you know, we're going to keep working at it. Support from our shareholders and the continued input from the management team, you know, we think we've got quite a way to go yet.
Good stuff. And finally, you mentioned the rental income. Do you pay a dividend?
Yes, we do. This is something we're actually quite proud of because not that many NEX companies pay dividends. We've paid the dividend 4 years in a row. It's increased each year, and our dividend policy is to try and increase the payout by about 10% a year. So we do that. We want to continue it. Maybe when the company gets bigger, you know, we'll be able to increase the dividend further. At the moment, we're still trying to grow the portfolio, and that's our biggest priority. But if we level off, then you know, there could be the possibility transfer to a REIT, and that would bring with it, of course, distribution of pretty much the entire profit. So, yes, very much in our minds to give benefit to our shareholders.
Well, on that note, Ivan Minter, the CFO of Ace Liberty and Stone, thank you very much for joining us here today.
Thank you for the opportunity to talk to you.